stock picking chat. We're setting up. Our guest right now, Mr. Kevin Green, is filling in, jumping on a couple minutes early. So we get a peek into the options flow. 5 minutes ahead of schedule. I'm cool with that. KG, what do we got heading into the bell here?
You know, obviously a little bit of optimism pretty much all day here, Oliver, when you're looking at the broader equity market. And for the S&P 500, we've seen a lot of call buying going throughout the day. And actually, we are also seeing a lot of repositioning when it comes to for institutions. So that is one thing to really note here. If you actually look at the open interest flows, and we can actually look at that histogram chart, you have a situation here where yesterday we were talking about a lot of these flows going to the 5700s or 5750s, basically meaning those short calls, those collar positions that are being put on. Now we're seeing roll activity to the 5800. So that's really bullish. I mean, you're talking over the last 3 trading sessions, moving up around 200 points when it comes to this type of activity. The market is really bulled up for now. Now we are actually moving a couple of these levels to the upside here. When you're looking at the toss chart, 5750 is going to be our new positive gamma level. That's where we're going to see probably some resistance here in the next couple of trading sessions if we do try to approach it. And then the intermediate pressure area, or we would expect buyers to actually step in here, would be 5700. And now I have negative gamma sitting at 5620, which pretty much coincides with that channel low that we've been following over the last couple of trading sessions here. We are trying to hold that 20-period moving average on the 15-minute chart. So let's see if we're going to be able to do that here today. We have not broken that level today yet. And if we are going to do so, I would say 5700 could be the target. A lot of bullish optimism, though, Oliver, trying to get to the 5750s. That would be your bull flow for today if we are able to hit and get a ramp going into the close.
Okay. And right now, it seems like that's a live possibility. A few attempted fades today never really caught on. I mean, it wasn't without some pushback here and there. There were a few attempts, right? A couple swipes.
Yeah, definitely. And if we look at that volume chart, I actually highlighted a couple of areas just to be mindful of going into the close. We have made some relative lower highs as well as lower lows over the last couple of, actually last, let's say, hour and a half. So that's something to be mindful of. We are seeing a little bit of exhaustion, but once again, on a day where we're up around 1.8% for the S&P 500, that is to be expected. If we were to see some buyers trying to step in here in the last 30 minutes of trading, 5710 is going to be your balance area for today. Basically, dealers would be net neutral. Below that is where we get into a little bit of negative gamma territory. And then once again, you want to hold that 5700 level. But once again, we are seeing a lot of bullish activity on the calls. Biggest risk for today and the unwinding of this momentum that we have seen is just the unwinding of those calls going into the close. That would make dealers basically unload on the long futures that they are in right now. So that would be the biggest concern that you have, but overall constructive for today's session.
Okay. And in terms of thinking about, kind of where we go if we get through some of the immediate term resistance, KG, come back to kind of the big picture for me here. How do we assess when we break out to fresh new levels? Does that make it harder to kind of figure out what's possible to the upside when we break free of like our technical ranges and stuff?
No, not at all. I mean, what we're doing right now, and actually what we adjusted here for today, is just a stair-step type of approach to this market, which is what you want to see. Now, if you're looking at the actual implied move or the realized move in these markets, they are outsized compared to what the average has been, but we continue to move up. And if we are continuing to see those institutions getting a little bit more bullish, thinking that the equity market's going to continue to rise, they're going to raise those call strikes to the upside. They're going to move up their puts, their hedges, and that's basically what we've seen in that formation. Now, tomorrow is going to be a very interesting development that we have taking place here. We have the quarterly expiration, and what comes with that, Oliver, is several different things. We have the index options, the SPX, the indexes. Those quarterlies are going to expire. We have the index futures that are going to expire. That's going to be the September contracts. The liquid contract now is going to be the December contract. And then we also have index futures options expiring. We have single stock options that are expiring as well. And last but not least, something to just remember, and this is going to be very important for traders for today's session. And the reason why I bring it up, ex-dividend tomorrow for the SPY. Why is that really important? Well, if you have these call spreads, and we've seen this melt up to the upside here, those short calls on that call spread, say you have a debit call spread or even a credit call spread, those short calls could be at risk of early assignment, and you could be required to be able to provide that dividend payment out. So if you're looking at the options chain for the SPY, you actually are seeing a put side skew to this market, which is really pricing in that ex-dividend taking place. And that's why the calls seem relatively cheap, but they're only relatively cheap because of the ex-div that's going to happen tomorrow. Just be mindful of that. I'm not trying to scare anybody, but when we have outsized moves like today, some of these out of the money call spreads that people may have had on for the last week or so could be in the money, and maybe they forgot about them. So I just wanted to remind the viewers there of that potential risk.
Okay. Like that. Good eyes always finding every potential, off ramp or anything that's on the road, even if it's not a blockage, if something's falling in the way. If there's a branch on the road while we're driving, Kevin Green's going to spot it. Love that. KG, thinking about the bear side, is there anything left happening on that part of the equation? Anyone like putting on big positions, or is it just gotten squeezed and toast and burned?
Well, I have seen some positioning going into the 5,600 puts, and that's being laddered out for pretty much every single week in October. So that's something to be mindful of. I'm not sure if that's, once again, a collar position that's being established, or if that's just an outright bearish look for this market. We talked about it earlier this morning. The last 2 weeks, basically the last 2 weeks of September and then kind of the first week of October is usually when we actually see volatility hit in this market. That also kind of coincides, once again, with that tax filing that we have on October 15th, which is actually kind of a big deal for some of the major players that try to delay paying taxes, and now they might actually sell some of their shares in order to be able to cover some of those tax payments. So just be mindful that seasonality is still there. We had a nice run, but you don't want to get faked out. I think you always have to keep your head out on a swivel. I would say the seasonality portion is going to be the key area of focus here right now, but we kind of talked about that setup at inverse head and shoulders, or even if you called it a cup and handle pattern on that daily chart for the S&P 500, we now broke through that. If we can close at these levels, we now have broken through that. Tomorrow, you want to see a follow through of that, maybe approaching at 57.50, maybe even trying to hit 57.75 tomorrow. That sounds aggressive, but you want to get as far away from that neckline as possible to really discourage the bears from trying to layer into this market for now. And I think right now, the bears don't really have a leg to stand on from an economic data standpoint yet until we get to the latter half of next week or even the following week.
All right. Trying to create some distance from the levels now that for so long held us back, trying to say goodbye and not look back this time. Understood. Thanks, Kevin Green.